Welcome back to Crypto Options Unplugged, everyone. I'm Imran Larker from Options Insight. I've got my man Dave from FRNT. And we've also got Stephane Ouellette, who's also the CEO of FRNT. Welcome back to the show, bud.
Thank you, guys. Nice to be back.
Yeah, good to. Well, now, last time you were on, we were all very balled up, I remember, because Trump had just got in and we were seeing a lot of positive signs. What happened to our bull market?
Yeah.
Straight in there.
Yeah. It looked like it was going in the right direction pretty for a little while there. You know, I think that one of the things that we discussed last time I was on was that, you know, beyond pulling central banks and sovereigns into kind of the acquisition phase and all of that of buying Bitcoin and adding it to their treasuries, it was the clearest impact was not going to necessarily be on asset prices. It was going to be more so on just the industry and their ability to operate. And I think there are a lot of companies, mostly the larger companies, that benefited from that. You see, you know, companies like Robinhood that were able to really open up their product suite because of the Trump administration, integrating with crypto and other kind of, you know, crypto-like or kind of fintechy markets. That like tripled in 2025, give or take a little bit. And, you know, other businesses like, you know, Coinbase, like these things that seem to have gotten aligned. There's a lot of large IPOs for like 2013, 2014 circa companies that were able to happen. But there were definitely some components of the bullish activity last year that were ultimately, I think, detrimental to the health of of crypto investments. The DAT wave really took me by surprise. Like I have to say, like at this time last year, let's say like when I was on the podcast, which was like November last year, you had, you know, obviously MicroStrategy had a monster period because 2024 was really where we saw, in hindsight, like the majority of the price appreciation. So Strategy had been back and all of that. And I had thought that Strategy was in a bit of a position on their own, where they, because of their scale and their ability to launch, you know, different share classes and all of that they were potentially going to be the Bitcoin vehicle. You'd always seen some other alternative vehicles come up, like there was some Solana DATs that came around. There's some Ethereum DATs that came around. Those also seemed kind of, you know, proponents of
like Bitmine, you mean?
Like Bitmine. Yeah. There was, you know, there was one in Canada called Soul Strategies HODL that was an investment company that pivoted to be a Soul DAT in like the summer of 2024. That was very successful. And you go, okay, maybe there'll be some smaller DATs around these smaller, you know, altcoins and stuff like that. That also made sense. The idea that like any shell on NASDAQ could just say they were doing a DAT and have their stock trade up ultimately until lockups came off and then, you know, the whole thing kind of unraveled. That I didn't expect. And to be honest, like it did
feel frothy. We were talking about it on the show. Like this feels a bit, you know, strange.
I mean, like, look, when you get like the Tether and Cantor guys coming in doing CEP, which is now 21, that also looks legitimate. You know, you have some other, you know, in every region, there's like one or two DATs that if you look at the principles, it was started by like long-term crypto proponents and people who know what they're doing and, you know, are taking a very long view to build a business. But at least 75% of what this DAT trade was people trying to save often a NASDAQ listing, because these NASDAQ shells are very valuable. Like a NASDAQ shell is typically like, you know, kind of around a $15 million asset. You know, it fluctuates, but, you know, let's say that's around where it is right now. And you don't want to lose these things. And so, you know, as you have a failing operating business, which is what a lot of these DATs pivoted out of, you have to meet certain equity hurdles. You have to do all this kind of stuff. And the DAT thing just seemed like it was working. So a lot of people with no crypto experience and really that also didn't show themselves to be even all that great business operators, because a lot of times they're, you know, save a failing business. You know, I'm sure there's exceptions. There were people got unlucky, and didn't deserve to have failing business, but and basically what that did was it sucked out the investment capital out of this small to mid-size operating businesses in crypto. And you're still seeing, you know, Coinbase having a good year, the Robinhoods that are, you know, on the retail side, Galaxy had a good year, although they're kind of moving a little bit away from crypto. So there once you got over the kind of that $1 billion benchmark, you start getting like the institutional capital that's trying to play the stablecoin development. Well, there's not a lot of product to play stablecoin. It's really just Circle. So they'll, put $1 billion into Circle, and Circle has, a valuation that is indicative of a high growth company, let's say. But if you look at the Nordic exchanges, you look at Canada, you look at the smaller cap crypto operating business, even in the US, there's been anemic levels of investment into these companies. And so you've got a scenario where the industry kind of become very top heavy. Like you've got the incumbents that are trying to figure out how to get more involved in the space. And you've got the Coinbases, I call them the 2012, 2014 kind of vintage companies. But then post FTX, and with the DATs not giving investment into these operating companies during like their first bull market in 2-3 years, there's like this massive gap between the smaller firms and the larger firms. I think there's a ton of opportunity for consolidation on the smaller side. That's something that I'm very interested in seeing play out over the next few years.
Maybe are there like indices? Are there like small cap indices of crypto companies? Because that might be something worth looking at, like little basket of small caps.
There is, but a lot of these companies are like sub $100 million market caps and wouldn't even qualify for that,
Right.
So, when I look at this stock, looking at the Canadian crypto companies is a nice way. You look at all the crypto companies in Canada, they're the equivalent of a small, maybe mid-cap US sized companies. Like micro to small is probably how they qualify in the US. And all their stock charts look the same. It's basically some small bumps along the road, but didn't kind of petering out, little bump, big sell-off kind of thing. It's a very similar situation. And a lot of these companies have great business opportunities in front of them. They do need capital to execute though. And if they don't get the capital, a lot of them are going to die because they're just going to get competed out of the business opportunity. They've got a great opportunity now, but it's not going to last forever. And so, I think there is a real opportunity to consolidate some of these smaller kind of adjacent businesses in the industry. But the these DATs are also going to potentially be consolidators of these kind of small to mid-sized crypto companies, because a qualification for a NASDAQ listing, unless you have a special exemption as an investment company or something else like that, is that you need to maintain operations. Well, when these shells announced these DATs, a lot of them wound down operations. And so they are coming up to needing to reestablish operations. A lot of them said they'd be in financial services around digital assets and all that. There's not that many assets out there that even qualify and have built out businesses and regulatory structures. But I think there's going to be a moment this year where there is a great opportunity for either smaller listed businesses or private businesses to merge with some of these DATs. And then you're really going to just be valuing them as businesses. You're not valuing them as what should this trade as discount to MNAV? Forget about MNAV.
They need a rebrand, don't they? The DATs now?
They need to do something, I don't think that anyone thinks that the world needs hundreds of these small companies that, they're basically like SPACs. Crypto is a currency. The Bitcoin is a currency, you can say what you want about the other ones. They're all they all have some value transfer mechanics. So they all have some components of money. So some of these things went from being fiat shells, now they're crypto shells. They still need to do something, So I think that is what's kind of missing from it's all hurting the industry, because the investment dollars came into these hands of people who were new to crypto and just trying to save a NASDAQ shell or something like that. A lot of these people, if anything, were stock promoters. So they said that they were going to build all these things, and they, focused on raising their next convert as their stock was going like this. And as it was going like this and then trading below MNAV, my experience is that I've been on the phone with a lot of these people, and they're like, I can't even talk to you right now. I've got a million investors calling me. And I want to say to those guys, you have $100 million on your balance sheet. That's pretty good. Equivalent of Bitcoin on your balance sheet. How about you stop picking up the phone? Stop picking up the phone, get to work doing the things that you said you were going to do.
They're paying you for.
Or else you're going to have a legal issue because you didn't do any of that stuff too. So all you can do is do the stuff like lend out your Bitcoin, create capital market services around Bitcoin. A huge percentage of them said that they were going to start doing that and get to work. And we've had a very frustrating year.
I was about to ask you,
Yeah.
tell me what FRNT is doing.
The DAT thing was very frustrating for us because they're like, first of all, the only activity that FRNT isn't licensed to do is to do like syndicate public market activity. Like we have, all the licenses to deal arrange in private markets and debt markets and all that kind of stuff. The only thing that we like can't do is this public, small cap thing, which is, not even a bread and butter of anyone in our organization. We're crypto experts and all of that kind of stuff. And so we, the big piece of business last year went to like small to mid cap US investment banks that like the year before they were doing something completely different. They're not crypto experts. They don't claim to be crypto experts, but they made hundreds of millions of dollars putting these things on the market. So that we could play around the edge on that trade. We didn't get a DAT, like any material DAT ourselves because like our stock's relatively illiquid. And also we have an operating business. So as of an operating business, the market value's at a premium to NAV already. So I'd have people saying, oh, you're already trading at a huge multiple to MNAV, a metric I'd never heard of before last year, practically. And I go, yeah, because we have an operating business that is being valued. Yeah, not interested, not enough liquidity, and I'd rather you trade, we're trading at book value right now. So you're disqualifying from a DAT. Okay, so even though we'd be very able operators of a DAT, we got disqualified from that. And then we go, okay, on the bright side, these people are all going to become clients. And what I would say is like the people who are trying to work and do the business have become clients of FRNT because we offer a very unique service. It's very tailored towards large holders of crypto. So we're, a lot of people who really want to build have found us. We've been put in touch with them. These smaller US investment banks in some cases have said, hey, FRNT can really help you manage the crypto thing. We've got good relationships there. But a lot of these smaller guys haven't done any of the lending that they said they were going to do, or any of the borrowing they said they didn't do, any of the derivative structuring they were going to do, because they're caught up in this investor my life sucks. Like I'm trading at a discount to MNAV. I'd say your life doesn't suck because you got $100 million of Bitcoin in your balance sheet. You're probably going to get to work and then you probably end up figuring it out over time. Mm-hmm. So I'd say that development was very it kind of just killed bull market activity. It was this dumb pump and dumpy trade in a lot of these situations that basically pulled in a bunch of capital that like was pretty disappointing for me because what it says to me is I'm going, institutions aren't taking this space as seriously as I am, because the big thing that they got involved yet is this kind of like, oh, I invested in this thing at par and it trades up 20x and then who cares what happens after. So I think that the fact that trade has blown up is making people who are looking to invest in crypto think, okay, maybe I'm going to have to like look at a business that's actually growing. I'm going to have to get smart on this space. It's not just going to be a momentum trade and all of that kind of stuff. But for FRNT, I mean, the opportunity that we visualized, like when we started this business, we were way ahead of these developments, but you're talking about 7 years ago now, is actually coming. Like I'd heard about tokenized equity trading for ages. And it was just so far away from anyone taking it seriously that I was going like, okay, write that down to 20 years from now. Like, I mean, platforms like the New York Stock Exchange are putting a ton of resources into tokenized equity trading. Mm-hmm. And when you get tokenized equity trading, we're a team from traditional finance. My background, for example, is I was an equity trader. The other market that I know better than anything is crypto, and the market that I know second best is equities. We're at the intersection of this development, and we can be a major advisor to platforms that are trying to build this thing. We can be an early participant. We can be a first mover as tokenized equity trading, tokenized credit starts to proliferate. We're now speaking to a lot of commodity traders who are starting to settle physical transactions in stablecoin when they can't in fiat. Like the whole world of TradFi and crypto is merging in the way that we anticipated and wanted to build the bridges in kind of the interim phases and be, strong advisors and salespeople to clients that are trying to get into this space, as you would in any market that you're not incredibly familiar with. And I'm looking at our opportunity set as, the next 5 to 10 years for FRNT. Like this is what we were going after. But, our equity valuation is down like crazy. If you talk to a traditional investor, I would say that they think that crypto is dead. I don't think they think that it's going like down much further, but for now, at least, it's, kind of quiet and dead. There's a lot of competition around crypto's narratives, like from innovation, now crypto's kind of old news on innovation. Like everything is around the developments in AI. And then, unfortunately, for some reasons that I think are explainable, Bitcoin has, this year did not correlate to inflation hedges. So that thesis has become very confusing for someone who's not focusing full time on it. So it's, I think you got to think ahead, like a year to 3 years and see kind of what's coming. But I think there's a lot of crypto companies that are being kind of passed over right now that have a better opportunity than they've ever had.
Yeah. I think, obviously we discuss this a lot. Like, there's so much fixation on price, obviously, for obvious reasons. And like you say, I think the digital asset, the DAT trade kind of took all the attention and focus and unfortunately a lot of capital away from the operating businesses in this space. But under the hood, there's so much good stuff going on, right? And so much opportunity. And even like you look at, obviously stable coins have been a huge success. You're seeing like the Visas and the MasterCards now sort of get involved on that. Someone on Twitter said to me the other day, like, yeah, look, there's no interest anymore in Bitcoin. It's like trade's gone, it's AI, it's all the other stuff. Just as the headline broke about like the Morgan Stanley and where they're going to, charge their ETF, and they've got $6 trillion under management. They're launching the Bitcoin ETF. So there's still so much going on that's just not getting the attention. But actually, like you say, Steph, I think when you're building a business in this space and when you're actually working in it, you're actually seeing things unfold as we kind of thought they would. Businesses like ours aren't maybe getting the valuations it deserves. And the investment isn't flowing where it should be. But the opportunity set is getting bigger and bigger. And whatever we think about Trump and things, this administration has started to open the paths for that, I think, which is the key thing. Right?
Yeah, and I'm sure that the anonymous Twitter writer has very strong expertise, but Tether, who knows a little bit about stablecoin, calls Tether a slave to Bitcoin. They call it a Bitcoin fiat on-ramp. That's what they call Tether. And in fact, Tether's probably going to play a role in institutionalizing the space. And by institutionalizing the space, like it means just like everyone uses it. Because there's, unless you're sending, like almost every transaction that a retail trader does needs to be approved by a compliance department. Not on a transaction by transaction basis, but allowing that activity. Basically, unless you're fully in crypto and sending something from, one private wallet to another private wallet, if you're sending like a pound or a US dollar, the process to which that is being done, even if you're a retail trader, has been approved by compliance, okay? So what stablecoin is doing, and this whole like, obviously stablecoin's the thing and all of that kind of thing, is that it's pushing compliance and risk departments down the path of approving stablecoin transactions. And by definition, blockchain-based payments. Right? So everyone's understanding that blockchain-based payments essentially dominate SWIFT, right? They have, there's more transparency, it's faster, it's cheaper. And if you throw all of those things out, the fact that it operates 24/7 just dominates, our existing wire system, right? So the path of least resistance will move people, especially with how people are transacting much faster. The amount of digital payments is just going up every year and all of that. People want to be able to settle on the weekends, everything like that. And so what that's going to do is it's basically, we're on a path to, over the next few years, blockchain-based payments basically becoming the standard. When a bank sends money from one bank to another bank, it'll be a blockchain-based payment. It'll be some stablecoin. Who knows what stablecoin it'll be? It could be Walmart stablecoin, PayPal stablecoin, Tether. Who knows what it ends up being? But they're going to be okay with blockchain-based payments. So if they're okay with blockchain-based payments on stablecoin, they should be okay with blockchain-based payments around Bitcoin and other mature crypto assets. So what moves people from stablecoin into Bitcoin? Well, now that I'm able to transfer any of these assets from my traditional incumbent bank account or through an app, and the government's good with it, everybody's good with it, well, now the fiat devaluation thesis comes back. And now that I'm paying for everything with stablecoin, it's all happening behind the scenes. To a consumer, it just feels maybe like I'm still moving US dollars, but now that's not, an EFT or a SWIFT transfer, it's a blockchain-based payment. If I decide that I want to start holding up more of my assets in Bitcoin and making payments with my Bitcoin and all that, The compliance department goes, yeah, I mean, there's nothing wrong with that. It's the same infrastructure that we've allowed for stablecoin. And so then the fiat devaluation, like central banks, incumbents controlling the money supply, all of those arguments that have basically been the foundation for Bitcoin's growth to date, like start to take over. And then you get one period where there's some negativity around central banking policy, and people go, you know what, I'm going to move from 90% US dollar stablecoin. I'm going to put 10% of my assets in Bitcoin because I don't like what's happening to my purchasing power. And then that whole thing develops. So, ever since I've been in digital assets, there is this affinity to have a soundbite around things that often say Bitcoin's not the thing. That is often the thing. Oh, when in 2018, it was like, oh, I believe in blockchain, not Bitcoin. I believe in enterprise blockchain. Everything's gonna be on the blockchain, except for the one thing that's actually worked for the last 10 years on the blockchain. That's not going to work. The things that haven't worked are going to work. It was, and now you've seen several kind of iterations fall through. And because Bitcoin didn't keep up in lockstep with gold, even though if you look at it over like a 2-year period, like the 2024 move was essentially, the 2025 move in gold. It was just a little before. But I think there's a lot of factors that you can point to that. People have just been willing in year, what are we at now? 17 of Bitcoin's existence to just fully dismiss it again. It's just, I mean, it's getting a little bit ridiculous.
Yeah, I think people get spoiled by like outsized returns, and then suddenly when it just goes through a period that's just more normal, they're like, oh, what happened to this thing, right? This was supposed to make me, 200-300% a year, and it's flat or it's small down, and they can't handle it. Well, I want to talk a bit about gold, and the macro set up as it is now. So obviously gold had a staggering performance. And people were talking about the debasement trade being the reason, but I think we've kind of debunked that a bit on this show and talked about how it was very much about, central banks, China, Russia, etc., all kind of getting out of treasuries and buying gold and owning gold. We have seen quite a steep correction in gold as the Iran war kicked off, right? Yeah. And then last week it was revealed that Turkey had been doing a big swap, which basically liquidated about 8% of their gold reserves. Yeah. So really we're seeing in real time the reason people hold gold, and then when the shit hits the fan, what they need to do with that gold to like keep their countries afloat, essentially, right? So do you think all the stuff that's going on, is increasing the case for more people, more countries to start buying gold, right? Once this stuff blows over and maybe oil starts actually traveling around the world again. And then does it also reinforce the case for Bitcoin?
I think yes is the answer in terms of, well, I don't think it's about making a case. I think the fact is central banks around the world are really weighting towards gold, right, and away from dollar-based assets. And if you look at a chart, you can clearly see the point at the moment the US froze Russia's assets. You start to see gold start to outperform everything and just go on its move. So I think that's going to happen in a way. And I think, to own non-sovereign assets, because the trust breakdown, and what we're seeing, some of these, long-standing institutions and relationships around the world are all breaking down. And you've got Trump out this morning saying to the EU, UK, right, you go, we're done here in Iran, you go negotiate on the Strait of Hormuz and to get what you want out of that. So you're naturally then going to say, right, well, what can we hold that we're not exposed to the SWIFT banking system or have you, and just freezing our assets. Right now, central banks, they hold gold. They're not there yet with Bitcoin, right? That will, and for all the reasons Steph just said, that will just become, as we live in a more digital world where we're transacting more in stable coins, that will just become a more natural mindset of, we should hold some Bitcoin on, in our reserves.
I think that's where we're headed, but I guess, is it a 3-year trade or is it a 10-year trade?
That's the big question. We don't know, right? But undoubtedly we're heading that way. right? Undoubtedly we're heading away. The other thing, obviously, I mean, I spoke about when the Iran war kicked off, like maybe this is like the kind of narrative spark Bitcoin needed. And Bitcoin has outperformed, other than oil, sort of most assets, even though it's kind of flat. Everyone else is down,
it's
right?
flat, yeah.
But obviously then you see immediately the limitations in holding gold if you're in the Middle East and you're trying to get out of there, and gold's pretty heavy to carry across a border. So yes, I think it's going to just kind of continue the idea that reserves will get recycled into non-sovereign assets, and eventually as well, then you don't want to be too exposed to gold all the time. So then what else can we hold? Bitcoin becomes, well, that's a way of diversifying away from this. But to your point, what we've seen in terms of how gold's reacted post the Iran sort of war is it was all about the central bank buying. It was a structural flow. Bitcoin had the opposite thing going. Whilst you had this structural buying, large buyers of gold, you had like wows and whatnot, be it the kind of Pavlovian response to the 4-year cycle. You had a lot of selling of Bitcoin, and there was a structural thing. So it wasn't about, it's lost its narrative. It's not a debasement hedge. It's not an inflation hedge. I mean, we've not actually had much in the way of inflation. Relative, we've come off a lot, right? Inflation's been quite benign. Or some might disagree on that, but so it was more about those flows. And if you're recycling excess like reserves and surplus reserves into gold, well, guess what? All of a sudden, oil's not flowing anymore. So your reserve balances are actually declining. So there's less money recycling gold. And more than that, you now need cash to pay for things. So you look to your reserves and you tap your reserves. And now you've got a load of gold. So we need to sell gold, raise dollars or raise currency to actually pay for things. And to your point, you saw that in Turkey, right? Trying to support their currency and everything. Well, we need to liquidate some reserves to do that. So I think that's all you've seen. I think we get the Strait of Hormuz open and oil starts flowing again, reserve balances start building up, then gold's probably a massive buy. So it's like all these things. Everyone wants this like simplistic why things go up or down. Sometimes it's just a flow, right?
Yeah. But if gold,
I think that this whole move to gold, I think that this is going to be like almost a comedic period in finance where they go, oh, actually Bitcoin wasn't the thing, it was gold the whole time. Meanwhile, you have European nations sending ships to New York to retrieve gold from vaults because they're not sure if the Trump administration is going to go, this is our gold one day. I mean, does that sound like the asset that the digital economy is going to be built on? And talk about the expense that you're going to do that as well. I mean, it's ridiculous. Yeah. So you've had a very strong, if you look at the nuances, it builds the Bitcoin argument. But if you look at some of the places that have done this divesting, and I was kind of hopeful that this was the period where, okay, they're not just going to look at gold, they'll look at Bitcoin as well as a diversifying mechanism away from the US dollar. Everyone was hoping that the time was now, and in an alternate reality, maybe it was. But to be fair, the countries that are diversifying the most away from the US dollar, like incrementally, so you're looking at China and you're looking at Europe, like they have an antagonistic relationship to Bitcoin. I mean, Europe has been terrified of private currencies. It's almost bizarre how scared they are of private currencies. Maybe it's because of how hard everyone worked to make the euro a thing, and to think that it's going to get replaced, 2 decades later, 3 decades later is like a hard one for them to swallow. But look at, when Facebook tried to launch a cryptocurrency in 2019 with Libra, the cataclysmic reaction came out of Europe, right? So they've got this kind of disaffection with cryptocurrency and other private currencies as well. And then China, I mean, they've got a closed financial economy. They have foreign exchange, they have foreign exchange restrictions on all of that. Having seriously integrating an asset to their economy like Bitcoin that, is harder to control in terms of you can't let this leave the country is not exactly aligned with their foreign policy and economic
it's freedom
policy.
Money. It's freedom money, which goes against what they want.
There is the outside thing that, you hope doesn't last long. But okay, so you have this move into gold because of a destabilized geopolitical environment that I think if you ask most people, they'd say, okay, well, the Trump administration is destabilizing things geopolitically. They're kind of drawing new lines. Things are changing. There's been, I'm not making anything up. Europe's been very upset that that's been a decision, that the status quo is being disrupted. And I would say one of the things that's most known about Trump and his family is that one of their biggest investments is in digital assets and Bitcoin. So it's like, I'm going to all of this expense and doing all these changes because of an administration run by a guy who I'm going to now hand a massive financial win. Like, sorry, I'm not doing it. And I would like to think that wouldn't have been kind of a major or long-term component to the whole story. But I mean, Trump would have had quite a laugh if after everyone divests from the US dollars, all of his crypto investments 10x because Bitcoin went to 1 million, right? So that could have been a component of it as well. But I don't think anything we've seen for anyone who's not, and there still is this just real negativity around Bitcoin. They don't really understand. It's like someone lost money on it and then they forever hate it. What is there to hate about Bitcoin? You're trying to put power back into the individual, away from the incumbents. Like, forget about North America. What about a region that has, a malicious government that's constantly trying to raid the bank accounts of its citizens that it continues opposition? Okay, Bitcoin in a private wallet, crypto in a private wallet solves that problem. What's so negative about it? But there is this percentage of the financial industry and the population that anytime that they can say Bitcoin is dead, they're all over it. And it's not just Elizabeth Warren. There's like people who feel that way. Love to sit down with them and be like, where's this all coming from, man? And I bet an answer, a lot of it was like, I invested in a crypto thing in 2017 and lost all my money. Something like that, So,
but isn't it? I feel like isn't it about relinquishing them, being reluctant to relinquish control of the system, right? Because if enough people adopt Bitcoin, the whole point of it is it's like this freedom money, right? Where you can peer-to-peer transactions. It just makes it harder to be controlled, right?
I don't know why that bothers a man on the street or a woman on the street.
Oh no, I'm not saying it bothers the man on the street. I mean, it bothers the government, right?
It bothers the government. I get, but I get that. But there's just like some perennial haters of the industry that every time the industry comes down, like there's a large percentage of the financial population that if you say Bitcoin, like they have this huge distaste to it. And I don't know, maybe it's because some of the early founders were obnoxious or something. Like it might not just be that they lost money. Maybe they just don't like they find the space distasteful because there's things like Fartcoin and all that. I don't like that either. But I've managed to kind of push that stuff aside. I also don't like every stock that trades on the exchange, but I can still look at the stock market and not, feel nauseous.
So have you seen the other thing that's hit the tape now is about quantum threat? Obviously, again, Google now talking about the leaps they're making in that space. Is that something that ever like worried you? Because it started getting a lot more airtime last year, right?
Yeah, but so there's some circumstances to these narratives evolving. I mean, for a long time, Bitcoin wasn't going to survive because it just funded criminality and it was a black box. Okay, that's been dissolved. Oh, Bitcoin's not going to survive because it's an environmental hazard. Okay, that's been resolved. So there's always like this cataclysmic death scenario that's being pushed forward for Bitcoin, and we're running out of ideas. Like one of the big ones that I was going. I mean, Bitcoin was like essentially launched in 2008, 2009. Okay. From 2008 on, we had a massive liquidity, environment globally. Right. So, if just me trying to check myself, I go, okay, well, let's see how it performs in a higher rate environment, because maybe this is just something that when money's cheap, people don't mind investing in it. But when people actually have to prioritize things, they don't invest in the industry anymore. Well, I mean, during 2024, that was disproven. And so the last thing that I've heard of that people can point to is, quantum computing, breaking the Bitcoin blockchain. Okay. I mean, first of all, this has been something that's been on the horizon basically since Bitcoin's inception, that this is something that there have been businesses that have raised a lot of money and failed already because they were trying to get in front of this quantum computing issue that Bitcoin is going to have later, and then it just didn't materialize. There's so many questions about that. Like, I think that consensus is now that, once you get once a certain kind of quantum computing KPI is hit, it will be able to break the Bitcoin blockchain. But I can think of 4 or 5 companies, one of which is $1 billion market cap, that is just creating technology to deal with this. And I don't think they're making really any revenue, but they're being given all the resources to try to manage this issue like that's coming. And, it's something that has so much uncertainty on timing, on what it's going to look like, on what is the particular moment that quantum computing hits where it all falls apart, that it's just kind of, it's still in the bucket of kind of unknown unknowns, like what the issues are going to be. But I mean, I could come up with other issues that the industry could have that would probably set it back just as far. So it's another thing, if like, for example, if Coinbase got hacked or something like that.
So it sounds like you're saying it's not tangible enough to really waste too much brain power on it right now.
Doesn't mean people aren't raising big money around it. It's a good investment theme, but it's not something that I consider in my day-to-day business right now. I think that there's plenty of daylight between now and those issues. So
how do you, Steph, how do you go about, like, you've been building business in this space probably longer than most. You've seen competitors come and go, the BlockFires, the Celsius come and go, right? You've kind of seen so much and continue just to build throughout that. Like how, what's your kind of mindset when you're doing that and you've got all these distractions? And again, from the amount of times when Bitcoin's been dead and the different threats and governments are going to ban it and now quantum, all these things. How do you approach that in terms of building your business, and what's the mindset like? Do you just have to ignore the noise and just kind of stick to the belief that started all of this for you? How do you go about that?
I would say that it's kind of the same muscle that you have to lean into, is if like some big macro thinker comes out with a different opinion than you have. Like Stanley Druckenmiller is exactly on the opposite side of the trade that you are. Does that mean you give up on the trade because Stanley Druckenmiller says that you're wrong? I don't think that that's how you feel, Dave. I think that you have extreme courage in your macro convictions. And if, some major talking head or whatever disagrees with you, you go, you know what, that guy's been wrong a lot of times. I've been wrong, I've been right. They've been wrong, I've been right. I have to. What am I doing here if I just follow whatever someone else says? Like at a certain point, the only move is just to believe wholeheartedly in what I think and be really intellectually honest with myself that is what I think. And that has been what I've done the entire time. Like I'm very good at, maybe it's because I'm delusional or I'm arrogant or something like that. But when I was first getting into the markets, and if someone said, oh, European debt's not going to blow up, and I said it was going to blow up, I'd go, I think I'm right. And it's just been this extreme courage of convictions, and to the point where it's like, I don't even think I can bring myself to do something that I don't think is the right move. I mean, and there's been so many temptations over the years. I mean, DeFi yield farming. I had investors that were going, if you open a DeFi yield farming business, I'm going to invest this much money in your business. I don't understand why you're not going to do it. And I go, because it's going to blow us up. If you, like, why, how are you still doing over collateralized lending instead of unsecured lending? Like grow up, the market's moved on. I don't know how to risk manage that business in 2021, 2022. We're not in it. That would have blown us up. So it's been, I think that like FRNT, I don't think has necessarily gotten what it's deserved from investors. And I think that it's been part of it is that I don't lean into these narratives when they become so hot. So I don't necessarily raise the capital around it and all of that kind of stuff. But I also don't feel comfortable looking someone in the eye and tell them that I'm going to do something when I'm like, I'm not really going to do that. I'm just going to raise the money, and then they're going to see this is going to work. And then I'm just going to have their money and I'll pivot away from something. I can't look at someone in the eye and say that. So I just go, I'm not doing it. And when everyone's talking great about DeFi, I was on podcast saying it was going to blow up. Who's this idiot? No attention and all that. And I've said, like, these opinions that you have, like a lot of times, especially when you're saying that things are going to blow up, it's not fun to think that, because you're wrong 99% of days, and the 1% of days you're right, you got to deal with the same shit everyone else does. And like, so I was like right about FTX being an out of control business that had a hole in its balance sheet. Okay. I've been dealing with like, congratulations, you survived. I've been dealing with the BS that Sam Bankman-Fried has left in our wake for 3 years now, more than 3 years. You know, like, you know, it's so that's what's done it. That's what it is. It's just like, you just have to, you know, like, I've survived this long because if I think that something's going to blow up, I don't involve myself in it. And, you know, I think we've had a pretty good call over the years on where the industry is going. I mean, I remember saying to people in April 2021, I mean, it's not like you have to be a genius to recognize this stuff. I mean, you've got Justin Bieber buying his own NFT for $4 million. Like,
yeah.
So before we wrap up, like, so tell me, so what are you most excited about right now in terms of what FRNT is doing? Like, which part of the business do you see the most juice that you're focused on, you're going after right now?
I think the biggest, like, I think there's kind of two ways to answer that question. Like right now, like, the business that is clearly available is around lending. Like, there has been there is not I don't think there's the same kind of ease of money flow around the lending structures in crypto that basically keep up with the institutional speed needs that you're starting to see from investors. Like, I think that that lending has not been resolved. It's, you know, like, it's a little quieter right now because in slow markets, that's typically when lending rates are the lowest. But I still think there's a lot to be done on the lending side, and we're investing, you know, that's where we're investing the most of our resources right now. But the opportunity that I see for FRNT is that you're having, you know, basically the blockchain payments ecosystem and cryptocurrency, you're starting to get to merge with a traditional financial landscape that I think is going to create, you know, and I've believed this throughout the life of FRNT. It's just, you know, we were a little early, is going to create a generational opportunity for new kind of investment banking like platforms, because you're going to be dealing with new processes, you're going to be dealing with new infrastructures, and just like in any development, you know, there's certain incumbents that'll be able to capitalize and become, you know, and like, just like IBM did and Microsoft did and all of that, they're going to find a new way to compete in this new era. But I think that that's what we're going through in institutional finance, and retail finance has been modernized like crazy. Like, what you have access to at Robinhood, certain jurisdictions, you can settle your stock transactions in stablecoin. Like, what Goldman offers their institutional clients, the gap between what a retail trader gets off Robinhood and what Goldman offers institutional clients has never been smaller. Yeah. So I think that the longer term play is the modernization of the institutional trading framework, which I think is way behind the retail trading framework. And that's what we're really trying to go after on a longer term basis. But again, like, there's quite a lot of uncertainty until when those businesses will become big monetizable businesses. So you have to continue to build, continue to stay on the forefront, but, you know, weight your investment appropriately for the revenue opportunity while you're taking advantage of these revenue opportunities. And I would say that the biggest ones for us are on lending, and beyond lending, like, advising people in the industry is also a very fast growing business for us. Like, like I said, like, commodity traders, like mass commodity trading houses are starting to get more involved in the space. They don't know necessarily how to manage the ecosystem like they feel like they should. Big opportunities for firms like ours to go in there, help them structure their firm in a way that they can. So there's two biggest opportunities now, but, you know, the modernization and you know, and integration of crypto and traditional finance is like the big opportunity that's out there. Yeah.
Nice. All right. Great to have you back on the show, man.
Thanks, mate. Yeah, I appreciate it. Always a great chat with you guys, and I'm watching closely when I'm not on. So,
all right, guys, remember, like and subscribe, and we'll catch you back here next week.